Welcome back, everyone, to Vox Markets. My name is Paul Hill, and I'm delighted again to be able to speak to CEO Steven Cooklin of Manolete, the UK's #1 insolvency litigation specialist. So welcome, Steven.
Welcome, Paul. Good to see you again.
Yeah, well, lots been happening since we last spoke, not least today's inline results and positive outlook. But before we sort of dig into the details, I don't suppose you could quickly give us a sort of bird's eye view on what's happening at the coalface of the insolvency industry. Certainly my daughter, who currently works for a restructuring department of one of the large accountants, is absolutely snowed.
I'm surprised you see very much of her at the moment, Paul, because everyone we're speaking to is now as busy as we've ever known them, actually, and with the forecast that they're going to get much busier. I mean, Begbie's put in a recent announcement they're looking to hire 100 people, which in the insolvency market is a big ask. It's a big ask. I know others like FRP are, expanding. There's been some consolidation because I think some of the smaller entities just realised, the wave of cases coming at them and the regulatory burden that these firms carry. You've got to be big to be able to take advantage, really. But no, everyone's getting very busy. And certainly in our stats, I mean, we see it as we look at the insolvency service numbers, which have for many months now have been higher than the COVID pandemic, pre-COVID pandemic level. For at least 9-10 months, that's now started to move into our case inquiries as IPs have done their investigation work, now pushing over the cases to us. So we are something like 34% up on last year for numbers of inquiries, which is good. November, I know we're only on the 9th. It's been going crazy.
Gangbuster.
24 new cases, nothing to do with bounce back loans. I hasten to add that was all in October. Those all came in. So November, 24 cases in the first 9 days of this year, with claim values of £20 million. And so I've not seen this level of excitement in the market since pre-COVID.
Fabulous. And so just moving now to the the bounce back loans. I mean, obviously that's a massive win for you guys. You're busy anyway. Now you've got this sort of like a pilot scheme with Barclays for a sort of I think it's 102 you mentioned in the statement. Can you just give us a feel of the context and timings and also resource to be able to sort of like service this? I mean, it's I think I've sort of figured £47 billion was given originally as bounce back loans.
Yes. So that's right, and it was all rushed out very quickly. I think I was talking to a very senior politician at BEIS, the business department, and I think something like 90% of the money under the bounce back loans went out in 3 or 4 months from that June 20 period. And understandably, the government wanted to get liquidity in the market. Very few checks were done. It was all government guaranteed, of course. And they did a great job in getting the liquidity out into market. And arguably, one of the reasons why I think inflation is as high as it is in the UK, obviously globally as well, but in the UK and in the US, is they put so much of this capital out, and actually it's bringing that liquidity back in, because so much of it was chasing white goods and cars and houses and gardens, etc., that people are spending in lockdown with all the supply chain issues, etc. So I think it's all part of the big picture, actually. But what clearly happened, and this has been covered by the media an awful lot, is that a lot of companies didn't necessarily many fraudulently took the loan. They lied about what their company was doing in revenue terms. It was all self-certified, which is asking for trouble. But where we get interested is what they did with the money. Because if the company just kept the money and then paid creditors, nothing actually done wrong as far as ripping off creditors is concerned, HMRC. But the cases that we're looking at with Barclays is those who put the money directly into their pockets.
Right.
So okay. And they just took it out personally. And this is why you hear all these stories about the fast cars, and you can't buy a new car for love nor money for months and months. So yeah, it's those types. So actually, the pilot started with 120 cases, 18 settled pretty much immediately, and that is a strength. of the Manolete brand right there. So we don't take a cut of that. We don't have to pay anything for it, but that goes to the government, and that paid for the entire cost of the pilot in one go. And that took a couple of weeks.
Great.
We then put the other 102 through compulsory liquidation. So petitioned into the courts, five-minute hearing. Most of those got made compulsorily liquidation on the spot by the judges. There were a small handful that the directors turned up and said, "Oh, no." So there's a second round for them. But the vast majority, I think 85 out of the 102. So they now go into the insolvency service. We're working very closely with them and Barclays, and they have undertaken to take just 21 days, which is fantastic, to turn to do the investigation work, and then to either run the case themselves or run it with our funding, or more than likely, we think over 90% will go then to a private insolvency practitioner firm. I won't name them, but there are only a handful that could manage the kind of volumes we're probably going to be looking at. And we have a pre-agreed deal with them for their costs, a pre-agreed 50-50 split across all of these cases for Manolete. We will be doing all the legal work, other than maybe a tiny bit at the end on one or two more difficult cases, in-house. So capturing the legal spend in-house and gearing up the company to do that, of course. But these are essentially, Paul, the most simple bread and butter cases for Manolete. The reason why we're the only firm, I believe, that can deal with this is that any other firm operating to get the recoveries back, and they tried, I'll come back to that in a second, involving a law firm on a £50,000 bounce back loan that maybe you'll settle at 40,000, the legal fees will swallow that within 3-4 weeks, of course. And there's no deterrent factor. There's no threat factor, because with Manolete, they know if they don't settle, bang, they're into court, they're into stat demands, they're into winding up, personal bankruptcy and all that kind of stuff. The lawyers just don't do that. They can't do it. They've got to get 80 insurance, and and by the time you finish with it, you've racked up £200,000 of fees on a £50,000 recovery.
Yeah,
which is really what we were the solution to that in the normal world 10 years ago. Yeah. So applying it to bounce back, and Barclays have really got this. They've been absolutely stunned with the results already. The pilot, so therefore, we'll be signing up these cases. So we're at the stage where we've got the in compulsory liquidation, battle insolvency service into the private IP. We should be signing these up towards the end of December, early January, February, and I think we will get recoveries from them by May, June next year, because we've done a load of BBLs outside of this with other IPs, just in their normal course of business. We've got something like 90% recoveries on the money taken, and in an average of 4 months. This is the solution.
So hopefully you'll get the money back within, say, 4 to 6 months, something like that, from originally.
Well, we'll have a settlement, and maybe a lot of these people actually haven't spent the BBL money. They took it, they parked it, thinking, will I be chased? I'm not going to spend it just in case I am chased. I'll give it back. They just need a proper tap on the shoulder.
Right. Okay. And so just on the quantum, if it's got, I think every single bounce back loans was 50 grand. So I think it's quite easy to do the numbers, but let's just assume sort of side there are 100 cases in terms of, going forward, you'll get some more, etc. 100 times sort of 50,000. And just, even I can do the maths. It's 5 million quid.
Yep.
And then you basically take out all the sort of the IP costs, which you'll be using. I don't know what that is. Let's say, for argument's sake, to keep the maths easy, it's a 2 million out of that 5 million. And that means
I'll call it 1 million, Paul.
Okay, 1 million. Okay. So that in theory, then, if you've got no other costs, would split it 50-50 between you and the creditor, which is HMRC or Barclays.
That's right. Well, the Treasury. Yeah.
The Treasury.
Yeah, paying for the NHS, paying for schools, but getting the debt deficit under control. This is going to be helpful.
Great. And I know you've done a lot of preemptive recruitment before this, because you saw this problem coming down the track. Have you got enough people? Because if you've got this resurgence on the normal insolvency industry, particularly because of the creditor protection measures being withdrawn by the government from COVID, and now I mean, I saw Barclays. I mean, I think the Daily Mail ran a story, and it said that Barclays has got about 350,000 of these cases just on their own.
Yep.
I mean, you guys are going to be where you're going to be working 24/7 for the next 10 years.
Yeah, no, we're fully cognizant of this, and what is helpful for us is that none of our partners in this want it to all deluge in 1 month or 3 months or 6 months even.
Yeah.
And there are, because Barclays don't want to, because they've had to pay for the winding up costs of all these companies, so out of their own pocket, £2,000-3,000. By the way, I mean, these banks get so much criticism. They have been amazing, absolutely amazing. So they're putting their own money out, so they're dependent on us getting recoveries for them to get their money back. So they've been delighted that a decent six-figure number's already come back from the pilot that has covered all their costs and more. I mean, they are stunned. Sorry, dealing with
getting efficient people to be able to handle this, because you're going to get a great reputation with Barclays, and you end up going to be giving some business with all the other banks as well, Lloyds and HSBC.
So, I think the key is what I said earlier, is the straightforward bread and butter nature of these cases. So we did the, we check out the net worth side of targets before. So we managed to get through those 102 companies in 2.5 days, the team internally. So that was nice and easy, because we're very, it's very tech savvy to do that. But to then do the settlement work, because again, a lot of the letters that go out are going to be bog standard, change the address, change the bottom, electronic signature, out the door you go. You can probably get through 100 of those a day quite easily. With our in-house lawyers just supervising. But the thing is when the directors come to the table and they say, oh, okay, I've got this letter, yeah, okay, I took the 50,000, can we talk about doing a deal now, please? So that we've got a team now of I think we're up to 14 in-house lawyers. So none of them will be involved in that front end right the way up to that letter going out the door. They will all be on the cleverer back end stuff of it. But it's a 15-minute conversation. It's a 15-minute conversation. This is not difficult. The critical thing is it's us having that conversation, and not some solicitor or debt collector guy, because they say, oh, Mr. Bloggs, if you don't repay this, we will have to consider issuing court proceedings. My team don't need to say that. We'll see you in court. And they know we'll be there. And that changes everything. Yeah,
we've got the brand, we've got the reputation where they know you're not messing around, and if they don't pay ball, then they get the ball smacked in their face.
And we'll happily do that, because we'll want to make an example of a handful as well.
Yeah. No, I know. And also, to be perfectly honest, HMRC and the banks want this to be resolved, and just politically as much as anything. Certainly the HMRC and the government. Now, and one big feature of the first half results that I think you're going to be adding to quite considerably is your cash collections. I saw this stat that in the first just over 7 months, you've basically collected £3 million more of cash than you've done in the previous whole year, and the last year. In 2022 was pretty strong anyway.
Yeah. So that was, I scribbled out a couple of numbers actually. So that was across 180 separate previously completed cases. So the granularity of that is adorable. And it's just really the machine that we've set up now. And it's just that machine is now delivering the cash, whereas when we IPO'd, we were signing up the cases, then we were marking them to market as we had to. We'll come on to that, I'm sure, in a minute. And now we've completed them, realised profits, and now the cash that these people had agreed to pay. And they do agree to pay, Paul. We're back to the same point, because if they don't, personal bankruptcy, take the house off them. Great shame, but shouldn't have taken the money in the first place.
Right, okay. And so in terms of sort of the whole cash collection, I mean, you've collected a lot of cash just recently. You've got a lot of hopeful cash being turned over in a much historically quicker period with the bounce back loans, and also the cherry picking from the sort of like the insolvency,
the uptick,
what uptick, etc. So your cash conversion is going to be a lot faster.
Fantastic.
So what's the background in terms of the HSBC, this technical breach? Because is this just simply because it's the non-realized profits?
It's just the unrealized profits. So this bigger case that for the first time in 13 years we had this adverse judgment against us. We had to write that down in full. And then, of course, a week after we warned the market on that and disclosed that to the market, the Court of Appeal very rarely said, no, we will look at that. That, that doesn't look quite right. Obviously, they don't say that, but they wouldn't look at it otherwise.
Yes.
So that was a little bit unlucky that we were a bit too transparent too quickly. Maybe. It's purely that point on the unrealized gains. So we have a profit covenant that the debt's going to be whatever, 2-3 times the size of profits on a kind of rolling 12-monthly basis. So when you've got a loss half because of this factor, clearly you get knocked out on that. So we're working with HSBC and we're putting a new package of covenant together. That should be done within the next 2-3 weeks, well before the year end. I just don't see any issue with it whatsoever. It's a technical trip,
and it's a very short term. I mean, it's only because you've basically written down some of the value of your existing cases and this large case as well. And who knows, in the future you may actually get that cash anyway. Well, it's only basically putting a more prudent provision in.
That's exactly it. Yeah.
Okay. And then in terms of sort of, you mentioned about the marketing side to get you to publicize. How are you seeing that? Do you need to put much marketing and promotion in?
No, but when you look at the case inquiries, going through the roof that we've seen, that there is a lot of work that goes on there. What I think stymied us during the whole lockdown, forget about when they suppressed the insolvency laws, a big problem with us was that all the insolvency events and the legal events that our people would be going to, 3 or 4 things a month and dinners and awards things, none of it was happening at all.
Right.
And that's really when IPs and lawyers say, oh, actually, good to meet. We've got this interesting case. Do you want to pop round next Tuesday to have a look at the papers? All that went underground, unfortunately, so we're delighted to see that back. And it's such a kind of village and a lovely village, the insolvency world. So, really superb people. It's just great to be getting that contact network back up.
Okay. Yeah. And then apart from obviously that large case, what's the status of the other 21 sort of cartel cases? I know there's you've got a couple of sort of flagship cases. They've got the BT, and I think you mentioned CityLink next time coming up.
Yes. So very interesting. The trials of British Telecom and CityLink are now over. The judgment is due to be handed down. Our KC, don't call it QC anymore, our King's Counsel.
Oh, is that it is? Okay.
Yeah. Has told us that sometime before Christmas, he's expecting to get the judgment handed down that everyone will be able to see. And then the read across for what the overcharge was and then whether there was any pass on discount should all be revealed by these 2 cases. I'm sure the defendants, who we've now served with all our claims, so that's a major milestone. And that's been we're properly engaging with the defendants' solicitors' firms now. So they will doubtless appeal elements of it, but the door to negotiation and settlement is wide open at that stage. And compared to our claims, compared to what BT, Royal Mail, huge supermarket groups who were buying, loads of trucks, we are small fry, and I like being small fry because it's easy to do a deal when you're small fry.
Right. Okay. So hopefully, if we get some good news before Christmas on those,
we'll certainly see the judgment, and then it's down to negotiating and positioning and all the rest of it. But we're feeling very pleased with it.
Okay. And then in terms of the unrealized profits, I know obviously we revalued the existing cases down, given the more austere environment, to really just reflect the level of recoveries we expect sort of going forward from potential sort of like plaintiffs, or is it plaintiffs? Yeah. Defendant, sorry, yeah. And so on that basis, if we get a really long, deep recession, is that now baked into the sort of like the estimates?
We believe so. So we were very proud that up until the last year end, so March this year, our record was that our realised profit on cases on average across the portfolio was plus or minus 1 or 2% on the unrealised. What we noticed in the last 6 months, Ukraine, inflation, interest rates, etc., that started to deviate. So that's why we took the decision at the same time as that larger case to review everything bottom up with the legal team, just telling the finance team, this is where I now think we're going to get on these. So it was, in my view, a one-off catch-up for those cases. Remember, they're over so quickly, Paul, that they drop out of the unrealised pot, if you like. And the new cases we're taking on today, tomorrow, next month are obviously in the full knowledge of the current economic environment and will be marked to market accordingly.
Right. And just to give us let's just work that one through. So let's just say you've got a director basically who's got, I don't know, £1 million house, etc. He's basically, I don't know, he's done a few things he shouldn't have done, taking dividends or whatever out of the business. Now he's got a mortgage over his house. Let's say, I don't know, with argument's sake, with Lloyd's, which is £500,000, etc., 50% loan to value. And then you put him. Is the insolvency practitioner ahead of the mortgage because it's secured, or is it? How does it actually recovery? Does the mortgage guys get paid before you guys?
That's only if the defendant goes into bankruptcy. So yes, the secured charge would be first. Payment, but there's in your example, a nice chunk of equity, and that's exactly what our net worth team assess at the start.
Right. Okay. Fine. Gotcha.
So it's that equity slice being squeezed a bit, and so the not a lot of cases, but it was material enough that were existent at the year end. Here we are 6 months later. If I was sat opposite the director and he'd offered me £200,000 back in April. Is he going to offer me maybe 180 now? Probably yes. Would I take the 180? Yes, because it might become 150, of course. So it's that kind of bottom-up approach that we took on the whole thing. So I think it's been a good catch-up on those. In the last 2 months, we've been settling a huge amount. You'll have seen in Mark's slides, £2.3 million of settlements last month. Huge. Almost everything way above the unrealised profit level, like way above.
Great.
Fantastic. That's where I feel happy, and the board feels happy.
Yeah. And then that's also, I mean, it underlines to investors your sweet spot, isn't it? You can basically, you can get granularity in potential sort of defendants, what their actually equity is, stripping out all the loans, which car loans, house loans, you put it all together, you do it quickly, and then you can assess that risk much better than, say, anybody else, which puts you into that sort of like, A box position.
Yeah, but Paul, I think there's one big point everyone's missing on this, with the greatest respect to everybody, is yes, the realisable value per case might be, we've taken it down a bit. What you're not seeing yet is a much bigger volume of cases, which is where you and I started this conversation.
Yes.
You've seen the medicine being taken in those 6 months. You haven't seen the renewed health of the patient in what I think will be much higher volumes going forward.
Yeah. So just on that one, then the outlook for the rest of the year and for really, and more importantly, FY24. I guess you're gearing up for a banner year.
Yeah, I think we've got great visibility. Visibility. Yeah.
Good. Okay. Well, and then finally, then just on newsflow, you're going to be. I mean, obviously, if you get a positive judgment, presumably on the sort of cartel cases, you'll put some, and then
absolutely.
And then you might do a sort of like if your business is humming, you may do a
trading update. That's right.
Yeah, will that be a Q3 or will you do basically a full year or both?
Let's see how it goes, but it could well be a Q3, and particularly if we got more BBLs, if the pilot goes to a stage 2. We have a call with them every Friday morning. And I'm like a broken record. Right, can we say, we've settled the first 20 cases. Can we get the next pilot started?
Yeah, well, I mean, it's a huge issue, isn't it, for the industry? And I mean, Barclays are, yes, maybe one of the biggest, but they're not the biggest. I can't remember who was the top of the tree. I think it's NatWest, actually. I can't remember who it was, but there's certainly a few who have got the mainstream high street banks have got masses. And actually, there's a lot of tier 2 banks or lenders who have been more edgy on their loans. And
people like Starling Bank,
yes,
who've been fantastic, coming forward, engaging. Yeah. They've been brilliant. I think what's very important, though, is that all banks, and I'm not pointing at Starling, all banks do what Barclays do. They don't just be seen to be doing something to kowtow to BEIS and the Cabinet Office and the British Business Bank. They actually do something about it, because our model, there is no risk at all to them whatsoever. So it's just upside for them and for the taxpayer.
Yeah.
So great. If they don't, I'll start writing taking out some adverts in the Times and the FT. I'll be on the warpath.
Yeah, well, I wish you the whole team, actually, real sort of good luck, just as from a perspective of a taxpayer. If there has been malfeasance in these bounce back loans, then it saves everybody a sort of a lot of money if we get an expert like Manolete coming on and recovering some money.
Particularly in the light of the cost of living crisis that people are suffering
exactly.
Now. It is quite outrageous. And this is why I say the banks have to not just say the right thing, they must follow Barclays' lead and do the right thing.
Yeah, brilliant. Okay, well, look forward in touching base for the trading update. Thanks then, Stephen.
Brilliant. Cheers, Paul. Love to see you.
Bye.